Stocks take a step down after mixed global cues of a hawkish Fed and unperturbed money markets. IT and metals lead the slide, while oil and gas and realty see some green. Poonawalla FinCorp inks a pact to sell its housing finance arm to TPG for 3,900 crore rupees, while JB Chemicals and Glenmark and Pharma buys the India and Nepal rights to cardio drug Rizal from Glenmark Pharma for 314 crore rupees. The street sees a flurry of share sales after VR logistics promoters sell a slice. A clutch of foreign investors offload shares in Sapphire Foods, while the government issues a notice for sale up to 5% stake in IRCTC. Thermax perks up after it is allowed an appeal against a hefty tax demand, while a likely buyback lifts Hinduja Global Solutions, and SBI Life springs up after analysts turn bullish on the sector and the stock. Infosys co-founder Nandan Nilekani says there is no plan B for a new chairperson other than roping in a non-founder. He adds that seeing this through is his top priority. Hello and welcome to Business Lunch. I am Sonal Bhutra, and those are the top headlines that we are tracking at this point in time. But taking a look at the markets, they are at the day's low. So Nifty is down 130 points as we speak, and a massive fall from the top is what we are seeing. The mid-cap side of things also not looking so good. So remember, just like 2 hours back, the mid-cap index was in the green, and that is when this fall started. And now that index is down 110 points. Bank Nifty too not looking good. That index down 200 points as we speak. So it's Nifty Pharma, Nifty Auto, Nifty Realty. Across the board, we are seeing big sell-off, and IT index is really the one which is actually putting a lot of pressure on Nifty today. So something like an Infosys, TCS, you also have Tech Mahindra. All these stocks are at the day's low, and they are the ones which are putting pressure on Nifty today. So HDFC is the other one from the financial space, which is not doing so well. So across the board, we are seeing some selling pressure that has come in. Broader markets too has started showing some signs of weakness. But let us do one thing. Let's begin with focusing on some stocks and news this hour. IRCTC is under pressure after the government announces an offer for sale in the company. Mangala Malu is joining us with all those details. Mangala?
3 reasons why IRCTC is under pressure today. The first one is additional supply coming in the form of the government's offer for sale. Second reason is that the floor price of the offer that the government has made is at a 7.5% discount to yesterday's close price. And the third one is everyone was anticipating this to come by. So there is some sell-on news taking place as well out here. So just telling about the offer, the base offer by the government is for 2.5% of the equity at 680 rupees per share. And were that to oversubscribed, then the government also has an option to give another 2.5%. So the total offer by the government is about 5% of their equity. As of the previous reported date, the government owns about 67.4% stake in IRCTC, and they will be offloading about 5% through this offer for sale. So higher supply and higher discount to the issue price, to the current market price, is something that the street does not like, as a result of which the stock is adjusting about 5.5% lower.
Okay, all right. Thank you, Mangalam, for joining us with all those details. On the other hand, Sapphire Foods is higher in trade today after a big block deal this morning. Nimesh is here to tell us more. Nimesh.
So, and as expected, a large block, nearly 11% equity, did change hands. The block happened in the block window, which suggests that it was well bid. We know the sellers since last evening that, Sapphire Mauritius sold, Goldman Sachs AMC sold a large chunk, and QSR, which is Samara Capital, they sold a small chunk. So the three large investors sold out nearly 11%. In terms of buyers, I understand it was well bid, and from both FIs and DIs. So a couple of large FIs have bought into this block deal, and some domestic funds have also participated. So the disclosures will be important towards the end or maybe post markets today. A large part of the supply is out of the way now, but still Samara Capital holds a large chunk. So there is a 90-day lockup for all the other investors except for QSR, and they can sell further. But for now, large part of the supply is over, and the fact that some big funds have bought into, there is a bit of support to the stock as well. And as I said, the block happened in the block window, so there was strong demand from global investors.
Yes, 5% higher on Sapphire Foods. Nimesh, thank you so much for joining us. JB Chemicals is the other stock on our radar. Will be acquiring Glenmark Pharmaceuticals' cardiac franchise, Rizal, for 313 crore rupees. To discuss the rationale of the acquisition, we spoke to Nikhil Chopra, who is the Chief Executive Officer and whole-time Director at JB Chemicals. Let's listen into what he had to say.
This market is growing at low single-digit rosuvastatin and combinations. And for us, with 2.5 to 3% market share in 2,500 crore market, We are looking at in next 3 to 4 years, why don't we double our revenue? That is what is the opportunity for us. So we have taken long-term debt. I think 70-80% is been funded with the help of debt, and rest will be the cash debt we'll be generating will help us in terms of how we can fund this. We are looking at, if the initial transition phase, we are looking at to grow at a low double digit, and probably then we want to see the trajectory going from 14 to 15%. So 26, 27, we should be close to 100 crores. That should help us. EBITDA margins are upward north, 55-60%.
All right, that's the word coming in from JB Chemicals. With that, let's move on. It's been 40 years since Infosys came into existence as a startup and is now one of the biggest companies in the country. As the founders reunite for the company's 40th anniversary, let's hear out Narayan Murthy and Nandan Nilekani giving their mantra for sustainably building a startup. Let's listen into what they had to say.
My fervent request to all these wonderful entrepreneurs who are so smart, as Nandan said, is to take a few minutes of their busy schedule and think about the issue that I have raised. That is, how do we earn the respect of every stakeholder? That's what I would say. That's about it for me.
No, I think one of Murthy's mantras was, happiness is a positive cash flow. So we have all absorbed that. We are all into positive cash flow. The only question I asked Jayesh and Nilanjan is, how much is the incremental cash to the balance sheet last month? So I learned that from him. So it's maybe old-fashioned and all that, but that's what we think. So I think the moment you're not having positive cash flow and you're burning cash, while there are arguments that when you burn cash, you can grow fast, burning cash is you lose discipline. So then whether you burn 1 million or 10 million, who knows, right? And then you also spend on a lot of things which need not be spent on, customer acquisition, this, that, all that. So I think happiness is a positive cash flow is our mantra. Learn from him.
You can catch snippets of this conversation all through the day and the full interaction later this evening at 7:30 p.m. only on CNBC-TV18. Time for a short break now. When we return, we get you a roundup of all the global central bank action from the US Federal Reserve, the ECB and the Bank of England. Stay tuned. Welcome back. You're still tuned into Business Lunch on CNBC-TV18. Well, global central banks, they are in focus this Thursday. Let's begin with the Fed. The Federal Reserve raised its benchmark interest rates by 50 basis points, taking them to the highest level in 15 years, indicating that the fight against inflation is far from over. Fed officials also forecast raising rates through next year and see no reduction until 2024. In a somewhat hawkish tone, the central bank says it sees itself taking the rates as high as 5.1%. until inflation is brought under control. Let's listen into what Fed Chair Jerome Powell had to say.
As we've gone through the course of this year, as we lifted off and got into the course of the year and we saw how strong inflation was and how persistent, it was very important to move quickly. In fact, the speed, the pace with which we were moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restrictive territory. It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But I would say the most important question now is no longer the speed. So, and that applies to February as well. So I think we'll make the February decision based on the incoming data and where we see financial conditions, where we see the economy. There's an expectation, really, that the services inflation will not move down so quickly, so that we'll have to stay at it, so that we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time. Our focus right now is really on moving our policy stance to one that is restrictive enough to assure a return of inflation to our 2% goal over time. It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. To the extent we need to keep rates higher and keep them there for longer and inflation, moves up higher and higher, I think that narrows the runway. But lower inflation readings, if they persist in time, could certainly make it more possible. So I don't think anyone knows whether we're going to have a recession or not. And if we do, whether it's going to be a deep one or not. It's not knowable.
That's the word coming in from Federal Reserve Chair Jerome Powell. But let's also listen into former Federal Reserve Board Governor Frederick Mishkin and JP Morgan's Jahangir Aziz on outlook as far as the Fed rate hike is concerned.
An issue I think that's very important is that they've slowed down the speed of raising rates. I'm not sure how critical that is in one sense, but it's important in another, in that, as Jay Powell has emphasized, the real issue is how high they have to go. I actually would have preferred to actually keep on the 75 basis point cycle for one more time, because I think that actually that they have to go to higher rates than the market's anticipating, and also that the dot plots are indicating as well. So I actually also like to be more preemptive. Again, this has to do with the fact that they dropped preemption, which is a huge mistake. So I think that they have to get back to indicate they really are going to be ahead of the curve, and they're going to be serious about not pivoting.
I think the RBI has more or less shown its hand, just like every other Asian emerging market country has shown its hands, that they are, in fact, some of the emerging market Asian economies like Indonesia, in fact, stepped down even before the Fed did. So I'm sure that the RBI will follow suit and will step down.
Okay, ECB policy decision expected later today. Staying with central banks and Europe, the market is broadly pricing in a 50 basis points hike from the Bank of England to take the main bank rate to 3.5%, a slowdown from November's 75 basis point increase, its largest in 33 years. The Monetary Policy Committee faces the task of dragging inflation back to its target while remaining sensitive to the economy. Remember, the inflation rate in the UK slowed to 10.7% in November, falling from a 41-year high in October. Finally, the Swiss National Bank is also widely expected to slow down its rate hike cycle and raise rates by 50 basis points in today's meeting after last month's aggressive 75 basis points hike. All right, so a lot of action, and of course you can catch all of that only on CNBC-TV18. With that, we'll slip into a short break. For now, more news and updates will follow on the other side. Stay tuned. Welcome back. It's time to get you the updates from Delhi's Indira Gandhi International Airport, which saw chaos in the last few days owing to high passenger traffic. Union Home Secretary Ajay Kumar Bhalla chaired a high-level meeting to discuss the airport congestion, focusing on the infrastructure and immigration facilities. Also in attendance was the Civil Aviation Secretary and senior officers of Delhi International Airport, the Immigration Department and Civil Aviation Security officers. This comes even as chaos continues across many airports in India due to overcrowding. And moving on to some more national updates now. Grim news coming in from the state of Bihar, where 40 people lost their lives due to the alleged consumption of spurious liquor in the state's Saran district. The district superintendent of police said that 3 people in connection with the incident have been detained, while raids are underway to nab others involved. Family members of the deceased blocked the state highway and disrupted the movement of traffic. They burned tires and shouted slogans against the district administration, demanding compensation for the kin of those who had died in the huge tragedy. Bihar Chief Minister Nitish Kumar expressed his grief over the deaths and said people should be made aware of liquor prohibition. Remember, Bihar has been a dry state under stringent laws since April 2016. Moving on, a level 1 fire has been reported at a high-rise in Mumbai's Lower Parel area. The incident was reported by the Mumbai Fire Brigade at a residential building, Avigna. While more details are awaited, authorities have been deployed. No injuries have been reported so far. Okay, I'm sure all the football fans, they will be tuned into the match. But for now, we'll take a look at the markets because Nifty is under a lot of pressure. It's a 140-point cut at the day's low. Bank Nifty is the one which is putting a lot of pressure on the Nifty. So Bank Nifty down 200 points as we speak. That is at the day's low as well. If we talk about the broader markets, there are some pockets which are doing really well. Though the mid-cap index is under a lot of pressure, that index is down 110 points. A couple of these fertilizer names, the likes of Fact, we spoke to the company today. They did say the demand is very strong on ground. That stock is up 12% as we speak. We have something like a National Fertilizers or NFL. That stock too higher by 9%. The other stock that is doing well is RCF. So the fertilizer space has been in focus and is doing well today as well. Some of these names which we don't talk about so often, MTNL for instance is up 13%. We have IOB, the stock is up 10% as we speak, and this year itself it's up 73%, out of which 60% of the gains have come in this month itself. So big moves as far as IOB is concerned. We have GIC has been a mysterious mover. That one is up around 8.5%, has been a laggard for a larger period of time. So today it's seeing some momentum coming in. Sapphire Foods, we've been talking about that. That stock is up 5%. On Mobile Global is the other one, seeing gains of around 5%. But overall texture of the market remains in favor of the bears today. With that, we'll step into a short break and actually wrap on this edition of Business Lunch. Stay tuned. Mid-Cap Radar comes up next.